Well, good morning, ladies and gentlemen. Over the next 10 to 15 minutes, I'm going to update you on the performance of the ProVen VCTs, so I'm going to be looking backwards rather than forwards like Callum. And since I'm talking about performance, it's important to remind you that what happened in the past is not necessarily an accurate guide to what's going to happen in the future. So first of all, a quick overview. ProVen VCT is now a smidgen under £100 million of net assets with 40 companies in the portfolio. The largest investment is Watchfinder at 6.3 million. And ProVen Growth and Income is of just over 70 million, but we're currently raising money for ProVen Growth and Income. So once that fundraising is complete, it's likely that that will also be up around 100 million of net assets. You can see that both of the VCTs are well diversified, with the largest investment representing well under 10% of the total net asset value. This slide shows the total return performance of ProVen over the last 5 years. The total return is the sum of the net asset value plus the cumulative dividends paid. And the grey bars show the net asset value at the 31st of August for each of the last 5 years, and the red bar shows the cumulative dividends paid over the period. You can see that apart from in the first year of the series, a period in which we paid a dividend, or the VCT paid a dividend of 12.6 pence, the net asset value has stayed fairly constant at around £1, whereas the cumulative dividends paid over the period have totaled 36.6 pence. So that means that the total return increased by just over 25p over the initial net asset value at the start of the period, which is an increase in total return of 23% over the 5-year period. The next part of the slide shows the annual dividend yield for each financial year of the VCT since we introduced a policy of targeting an annual yield of 5% of net asset value. And you can see that the target has been achieved in each of the last 4 years, with overachievement in 2014 and 2016 as a result of some good exits from portfolio companies in those 2 years. This is the same chart for ProVen Growth and Income VCT. Again, the net asset value has been maintained around 80 pence throughout the period, with cumulative dividends paid over the 5 years of 25.5 pence. The increase in total return over the period is 26 pence, which is an increase of 33% on the opening net asset value per share. Again, the second part of the slide shows that the 5% target dividend yield has been achieved in each of the last 4 years, with overachievement in 2014 and 2016. Now, it's important to point out that these charts take no account of any of the VCT tax reliefs, which is obviously a key factor for you to decide to invest in a VCT. And once the initial 30% income tax relief has been taken into account, the increase in the value over the initial net asset value per share, net of tax relief, is 75% for ProVen VCT and 89% for ProVen Growth and Income VCT. And similarly, the 5% yield figure takes no account of the initial tax relief. So the yield on the actual net cost per share is, the target yield is 7.1 pence. Deep breath. One of the main pieces of feedback last year was that you'd like to see how the performance of the ProVen VCTs compares to other VCTs in the market. And we always like to give you what you ask for. Apart from wine at lunch, but here are some figures on comparative performance. So this slide shows something called the net asset value total return over a 10-year period. Net asset value total return assumes that any dividend is paid is reinvested at the net asset value per share after the payment of the dividend. The figures were taken from the website of the AIC, formerly the Association of Investment Trust Companies, on Sunday. So if you've got any issues with the figures, blame them, not me. So there are 31 VCTs which have a track record of 10 years or more. I can't get them all on the chart, so what I've done is shown the top 5, and then a group in the middle of the table, and then the 5 worst performing VCTs. The blue bar towards the left of the chart represents ProVen Growth and Income, which, as you can see, is the second best performing VCT over 10 years on this measure. And £1 invested in ProVen Growth and Income VCT 10 years ago with dividends reinvested at net asset value would now be worth £2.68. ProVen VCT, which is represented by the red bar in the middle of the chart, is just above halfway in the table, sandwiched between 2 of the Mobius VCTs and Maven Income and Growth and Chrysalis VCTs. £1 invested in ProVen VCT 10 years ago with dividends reinvested would now be worth £1.87. And on the right-hand side of the chart, you can see that the worst performing VCT over 10 years, and I won't name it to spare blushes, has turned £1 invested 10 years ago into 57p. This slide shows the net asset value total return over a 5-year period. There are 49 VCTs with a 5-year or greater track record. And again, I've shown the top 3, a group in the middle of the table, and the last 5. The best performing VCT over 5 years has turned £1 into £1.82 with dividends reinvested. ProVen Growth and Income is slightly above halfway in the table, 24th, and a total net asset value return of £1.37 per pound invested. And ProVen slightly lower than that with a NAV total return of £1.29. Again, you can see the worst performing VCTs at the right-hand side of the chart, and the worst one has turned £1 into 61 pence. Now, it's worth saying that the environment over the last 5 years has been particularly ideal for those VCTs that have concentrated on doing management buyouts, who've been able to gear their investments with significant amounts of debt at low interest rates. And in addition, because of the way that buyouts are structured using NewCos, it's also been possible for these VCTs to invest more than £5 million into a single transaction, allowing them to invest in larger companies. Now, neither of those things has been an option for VCTs like the ProVen VCTs, which invest in growth capital. Clearly, investing in management buyouts going forward is no longer an option under the new rules, and it will be interesting to see what impact that has on the performance charts over the next few years. The next slide shows the cash movements, the major cash movements in ProVen VCT over the 2-year period between September 2014 and August 2016. The reason I've chosen a 2-year period is that over the last few years, each of the ProVen VCTs has raised money on a 2-year cycle. So for ProVen VCT, starting in September 2014, it had £27 million of cash. Over the next 2 years, it raised £21 million from the disposal of investments and invested £22 million. So over this period, you can see that realizations roughly matched investments made. But that isn't always going to be the case. The last 2 years have been a particularly good period for selling companies. And we can't rely on that being the case going forward. So we need to plan the cash needs of the VCTs, assuming that that market for selling companies dries up, or at least is not as attractive as it has been over the last couple of years. And we had a period following the financial crisis when it was very, very difficult to sell companies for 3 or 4 years. The VCT then paid out about £7.5 million in dividends, used another £7.5 million of cash paying operating expenses and buying in shares through the share buyback programme, which means that if we hadn't raised any money during the period, by this August it would be down to about £11.5 million of cash. As you probably know, we did raise money, most of it in the period at the start of this year. We raised 36.6 million during the 2-year period. So we currently stand with £48 million of cash in the VCT, which is enough to keep making investment and paying dividends for the next couple of years, which I'm sure you're very pleased about. And it's a similar story for ProVen Growth and Income. The opening cash position in this case was about 18 million. 17 million raised from disposals and 23 million pounds invested. Dividends of just under 8 million pounds and operating expenses and share buybacks of just under 6. Now, if we hadn't raised any money and we continued to invest at that rate, we would actually run out of cash, where we'd be at minus 1.2 million pounds of cash at the moment. Obviously, in that scenario, we would have had to rein back the rate of investment. Actually, again, we did raise 24 million pounds during the period, so the VCT currently stands at about 23 million pounds. But again, as you probably know, we've recently opened a new share offer for ProVen Growth and Income, and that's going well. We've recently allotted just over £7 million of shares. So we're hopeful that that share issue will replenish the coffers so that, again, we have enough money to make investments and pay dividends for the next 2 years. So that's it from me. I'd now like to hand over to our Chief Investment Officer, Karen McCormick, who's going to update you on some new investments and developments in the portfolio. Thank you very much.